Good morning, student. This is our second unit of project management. The unit is project identification, selection, and planning. In the last lecture, we have seen what is actually the pre-feasibility study and feasibility study regarding to the project management. In this lecture, we will discuss some more points. The first point we will discuss is what is actually the break-even point. Let us see the definition of a break-even point. Here comes the definition. Project break-even point also can be considered as the point in which when revenue forecasts are exactly equal to the estimated total cost. Okay, revenue forecast that are exactly equal to the estimated total cost of the project. This is where a company's losses ends and its profit starts to accumulate. At this point, a project, product, or business is financially viable. This is a good point regarding a project for any business for that particular project. Whenever the cost, the revenue forecast, whatever the exactly cost of that project, that is exactly equal to the estimated total cost, so that from that point the profit of the particular company actually start. That is nothing but a break even point regarding to a project. In other words, we can say that in business accounting, the break even point that refers to the amount of revenue that is necessary to cover the total fixed and variable expenses that are incurred by a company within a specified time period. This particular revenue that could be stated in a monetary terms as the number of units that are sold or as hours of services that are provided to that particular organization. Okay, getting the concept of break even point. What is actually the break even point in an organization regarding to that particular project? Now let us see. Although it does not seem like much of the business goal, breaking even is an important point of reference for finance professionals. A company or a project break even point that gives a valuable benchmark that helps to develop long term business plans. Okay, by the break even point, it gives a benchmark for developing long term business plans. Means at that break even point, the organization understands that whatever the revenue that was calculated, forecasted earlier, that is exactly equal to the estimated total cost, so that profit of the business starts. That's why long term business plan can start from that point. Knowing a break even points for any for key areas like sales, investments, repayments, productions, and operation, that helps one person to determine pricing of products, servicing, and other operational aspects of your business. If any one of you know that your break even point, it's easy to see the effects on different business strategies. By this, the potential investors in a business not only want to know the return to expect on their investment, but also the point when they will realize this return. That is actually the break even point. This point is also is a point of interest for the potential investors. This is because some companies may take years before turning a profit, often losing money in the first few months or years before breaking break even point. For this reason, break even points, they are an important part of the business plan. They are presented to the potential investors. This was exactly what a break even point in any organization regarding to the project means. Break even point is a very important point for any project, so that potential investors, by knowing the break even point, they will understand, they will get a clear idea about their investment, that from which point or from which date they will get the return on their investment. That's why it is a very important point. Everyone should be clear about, every project manager, everyone regarding to the project should be clear about the break even point of that particular project. Okay, let us see some of the examples of the break even point. Consider any company ABC that calculates the fixed cost that consists of executive salary, after that assets, property taxes, and its lease. The company's fixed cost of production of its main product, the widget, adds up to $60,000. There are also variable costs involved in the production of a widget, including factory labors, raw materials, and sales commissions. The company calculates that these variable costs add up to 80% widgets. Each unit is sold at $2. With this information at hand, it is possible to calculate that break even point for production and sales of ABC company widgets by using the formula. We can use that whatever the total company's fixed deposit of production, that divided by the amount at which each unit was sold minus the percentage of widgets, means the variable cost that was added up to the percentage. By that, the we can find out the break even point for that particular company. Okay, now let us consider some of the questions. Using break even analysis, one can answer some of the questions. What are the questions we can answer after analyzing the break even point? What are the projected profits and losses at any given output level? Okay, the answer of this question can be given by the analysis of break even point. At what minimum sales level do you avoid making a loss? That is also can be answered in a break even analysis. Do your sales projections for a new product exceeds break even point or not? Next question we can answer is that if you drop a product, will you even improve? Break even point will be improved or not by dropping a product or not? This answer of this question also can be given. How will raising or lowering prices affect your profitability? Then if cost increase, what is the effect on your break even point position? How does investing in facility improvements affect your break even point? These are the questions we can answer by the analysis of project break even points. Means by all this discussion, we can say that in a business your ultimate objective is to make money. So when you launch a new product or purchase a new piece of equipment, how do you know whether a potential investment will at least cover the cost associated with it? Hmm? You could simply make a wish and hope it all works out, or you can evaluate the project more formally to see if it makes financial sense. One way of doing this is to complete a break even analysis. This particular thing determines the break even point, the level of output at which the revenues generated by a project that are equal to cost. At a break even point, you don't make or lose money. Okay, once you pass break even point, you make money. Below break even point, you lose it. Means above the break even point, after the break even point, one will make profit, one will make money. That is the ultimate goal for having any business that will be formed after the break even point. What is the break even analysis? The break even analysis entails calculating and examining the margins of safety for any entity based on the revenues that is collected and associated cost. In other words, the analysis shows how many sales it takes to pay for the cost of doing business. Analyzing different price levels relating to various levels of demands, the break even analysis that determines what level of sales are necessary to cover the company's total fixed cost. A demand side analysis would give a seller significant insight into selling capabilities. Okay, getting the concept of break even analysis. Till now we have seen what is the definition of break even analysis, what are the questions we can answer after the break even analysis, the example of break even analysis, and what is details about the break even analysis, break even point analysis. Now here we can have a question that what is the standard break even time period for any project or any organization or any business? We can calculate that an acceptable break even windows is a 6 to 18 months. Means within 6 to 18 months we should achieve a break even time. If any calculators determine a break even point that will take longer to reach, one will likely need to change a plan to reduce the cost. Increase prices for both a break even point more than 18 months in the future is a strong risk signal. Okay, that is actually the standard break even time period. It's 6 to 18 months. Now, the next question that can arise in mind, when to use a break-even analysis? Basically, a business will want to use a break-even analysis anytime it considering adding costs. Okay, this additional cost could come from starting a business a merger or acquisition. They can merge any person. They can increase the cost of that particular material. Okay, adding or deleting the products. They are adding some of the products, or they are deleting some products. Obviously, if they are adding some of the products, then the break even point will also change. If they are deleting some of the products, then also break even time also will be changing. From the product mix or adding locations or employees, all these things can change the break even analysis time. In other words, one should use a break even analysis to determine the risk and values of the business investments, especially when one of these three events occurs. That is expanding a business for lowering pricing or narrowing down the business scenario. Means in case of expanding a business, break even points will help business owners to get a reality check out on how long it will work or it will take an investment to become profitable. Means when they are expanding a business, they will get a clear idea about the profit about that particular business by the break even point. For an example, we can say that calculating or modeling the minimum sales that are required to cover the cost of a new location or entering a new market. That is nothing but by which we can understand the what is the break even point where we can get a profit for that particular business. Second, we were considering lowering the pricing. Sometime businesses need to lower their pricing strategy to beat out competitors in a specific market segment or product. So, when lowering the pricing, business need to figure out how many more units they need to sell to offset or make up a price decrease. That is nothing but the while lowering the pricing. Next point we can consider is that narrowing down business scenarios. When making changes to the business, there are various scenarios and what if on the table that complicate decisions about which scenario to go with. That is nothing but the narrowing down the business scenario. While narrowing down the business scenario, there can be changes in the break even point analysis. Okay, getting the idea? Now, how to lower a break even point? There are some of the two basic ways to lower a break even point by lowering the cost and raising the price, but neither should be done in a vacuum. Means your option carefully in a pricing method and consumer psychology to make sure you don't sell more product but lose money in a bargain. Okay, that is the main important point regarding that. Further, we can consider that all elements of cost such as associated quality and delivery before slashing them to prevent damage to your brand. Outsourcing products or services can also be reduced cost when demand or volume increase. This is how we can lower a break even point. Next, move to the next point, that is project selection. Now, let us see what is actually the project selection. The project selection that starts from where project identification ends. Project selection is careful study for each point idea in detail and choosing one of them for the further consideration and development. Okay, that is nothing but a project selection. It starts where project identification end. Do you remember what we have done in the project identification? Whatever the project, we have considered all the technical resources, we have taken into consideration all the things regarding to that project, technical, financial, what are the different resources, what are the team leaders, what are the peoples they are working under the team leaders. All the things we have considered in the project selection, sorry, in the project identification. After the project identification, next phase comes, that is project selection. It is not too difficult to find a good project in need of investment or other assistance. Project identification and selection typically starts with generating the ideas. Means in identification process and in selection process, it both the process starts with generating idea regarding the project. Means the whatever the project, whatever is actually the idea of the project, from their project identification starts. Okay, from the idea of that project identification start. Once the project identification is done, we are selecting the project. Means we have identified all the things regarding the project, means all the components regarding the project. After that, we have to pick up a project. Means after the identification, we have to pick up different components regarding to that project. That is nothing but the project selection. The biggest challenge is to select the idea that have the highest chance of becoming beneficial project. To help in this process, practitioners can use an organized approach for narrowing down and moving forward with the ideas that can be best converted into the project. Means one of the biggest challenge that I've told here is to have a highest challenge of becoming beneficial project. Means whatever the project we have picked up by identification. Means initially we have identified different projects. In the project selection, whatever the project we are selecting, main important point here is to select a project that will be beneficial. Means it will be good earning, it will be having profit, it will be having useful for different people. That's why that is the important challenge here for the project selection, to have a beneficial project. Okay, now we can say that what is actually the meaning of project selection is that the process of evaluating and choosing projects that both align with an organization's objective and mixing its performance. Means we have to choose a project that align organization's objective. Means whatever the requirements given by that organization or that particular person, you choosing that particular organization's objective, and by mixing the performance of the people's team leaders or team persons they are working under it, mixing this all the things, we can find the project selection. Means by considering exactly idea or objective of that particular person and taking into consideration what is the performance level of the people they are working over there, maximizing its performance by making the people to work in a good manner. That is nothing but the project selection. Here prioritization refers to ranking or sourcing projects that are based on certain criteria for determining the order of execution.